Welcome back to the Whatcha More podcast. I'm your host, Quinton Harris. You're dialed in for episode 267. Welcome back to the show. So how close are we getting back to 2019? Could you argue that 2019 was a normal time frame for real estate? I think that. We've got that and more in this episode at What's Your One More. So when we talk about industry life cycles, I think it's real important. I'm going to throw an image up on the screen here, and it kind of defines the four primary phases of an industry cycle. And the reason I bring this up is because every industry seemingly goes through this. We start at an era of normal or normality, and then all of a sudden there comes this expansion because the calm in the market, it basically creates this opportunity for expansion at some point, right? And expansion, the industry grows and in business and profit, and all of a sudden you start seeing more opportunities, and companies expand. And then this era of chaos will take over. And chaos is a growth that just attracts more competition at ridiculous rates. They come out of nowhere. And startups are very easy during this time. You see a lot of venture capital money come in, a lot of moonshot funds. Expansions are a thing that kind of take over a market, right? And these expansion phases can last for a long duration, but eventually they will come around to the consolidation phase. And this is where profit starts to constrict, the market volume starts to constrict, and you have mergers and acquisitions that take place. This time frame can last for anywhere 6 months to 6 years, and then you make your way back to normal. And these are the four phases of an industry life cycle that I see. So let me give you an example of an industry that lasted a really long time in these cycles, right? So let's start with the airline industry. Normal in the 80s was you would call a travel agent and you would say, hey, I'm looking to travel, blah, 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 help me find an airline. And at that point, their job was to find you the ideal vacation package, travel package that fit your needs, but also around the timelines in which you wanted to depart and arrive. And they would see and go find out all of that information. And then expansion started, and the travel agents started to become less and less used, and people started going more towards, in the 90s, more online, early 2000s, late 90s, online. And you would look at comparison sites that would do the shopping for you, right? Progressive Insurance was a comer to the market that kind of drove that. Hey, we'll show you everyone else's price plus our price. But back to the airlines, you had all kinds. You had, Kayak, you had Expedia during this time, and they were doing very well. And then expansion started, and you started having Orbit, Gnome, and all of these websites started not only comparing airlines, but rental cars, places in which you could stay for for hotels. So it just created this wild expansion era. This lasted a really long time. And then consolidation kicked in the mid to late 2010 era. And now all of those sites are owned by two companies own all of those sites that are out there right now. And it's interesting how that consolidation phase brought it all together. And now, for the most part, statistics show when you go to book an airline ticket, most people go directly back to the airline's website and book it directly. That industry cycle came full circle back to normal. And obviously the person that's left out of this is the travel agent, but it went full circle back to going directly to the airlines versus circumventing the airlines and going to other places. Well, real estate has the same cycle. Whether it's mortgage or whether it's real estate, we have the exact same cycle. It's just the only difference is sometimes ours can be accelerated by government policies, or it can be detoured by actions that happen outside of our control. But the cycles live on, right? And I've been doing this for 25 years, and I can point to 3 of these cycles that I've seen. And I feel like we are in the consolidation phase of real estate right now. We're coming out of the consolidation. What I'm saying is there's a light at the end of the tunnel that is so visible right now that I feel like we haven't seen in probably 3 years. And I think we're on the tail end of consolidation. Now, you could argue that maybe this gets dragged out a little bit more with what's going on overseas, but this seems to have a little bit of deterrent. But I don't think it's going to stop the normality from coming back, right? It could escalate it if this thing overseas becomes a wrap and it's done, right? And whatever that means, by the way. Just less escalation, right? If there's some finality over there, this could speed this up. But getting back to the point is we're coming out of consolidation. And I think that this is good to get back to normal. So let me define where I think normal started and how we got to where we are today and where I think we're going. I think normal was 2019. I think you could argue in the mortgage profession and the real estate space, 2019 was a very normal time. We had normal transaction counts. We had a very healthy, balanced market. We had the seasonality of the ebbs and flows. You had the rise in the March season, the peak in the June, Julys, and then coming off of August back into school season. Then you had the Santa slump back into the New Year's, right? This was normality in every market, and it felt comfortable, and everybody was having some consistent numbers and consistent transaction counts. Maybe you were off one month, but you can guarantee the next month the pipeline was there. We haven't seen that kind of normality since 2019, because what happened was, coming out of that, I could argue, and probably you could too, late Q1 2020, we came out of that going into April of 2020, especially May of 2020, expansion started. The numbers were off the charts. It wasn't chaotic yet, but the numbers were off the charts. And the count of mortgage lenders, the registered number of what we call mortgage loan originators, the MLOs, the numbers weren't quite as chaotic as they became in 21. Same count for real estate agents. In 21, it became chaotic. We had, in February of 21, there was a peak of licensed originators. It was over 320,000. Today, we stand at about 176. So you could say less than half. At that time, it was doubled at 321 from where we are today. Real estate agent counts were all-time highs during that time. It was chaotic. Lots of competition. Everybody wanted to get in and be a part of that. And that went on till probably late Q1 22. You could say, I think the pipeline started to kind of fizzle out in April and May because the rates started to rise a little bit. We started to see some compression in the market, and things became more competitive. 22 was still in the chaotic phase. 23, late 22, early 20 is when the consolidation phase started. And in real estate, one of the largest consolidations that took place during this time, we'll pull up here, was, really in 2025, and it kind of finalized in 2026. And the reason for that is going to be the merger between Compass and Anywhere, right? That was one of the largest real estate mergers that we saw on file, because you took a huge organization like Anywhere that accounted for quite a few companies in itself, from Century 21 to Caldwell Banker to Sotheby's, all under that one umbrella, Anywhere Real Estate. And then Compass came in and got all of that in a merger and acquisition. And even you could say another one that took place during that time was Stone Point Capital, that came in and took over the majority of ownership of Keller Williams. These were consolidation phases that we were living in 25, and here we are in 26. We're starting to see less and less of the mergers and acquisitions. I say that, but then today, as I'm sitting here right now, this is Monday, April 27th, last week, RE/MAX was purchased by Real Brokerage for $880 million, another consolidation that happened. And I look at this because this is the signs of getting back to normal. Once the consolidation phase runs its course, and I think that's probably one of the last ones you're going to see, because it was one of the last major brokerages that were massive out there. Assuming Compass doesn't gobble up Real, and you can only keep going for so long. But the reality is that we're on that tail end. You can say the same thing in the mortgage space. Look at what Rocket acquired. Rocket Mortgage acquired a large servicing platform of Mr. Cooper. Look at what UWM and Cross Country were recently fighting over with Two Harbor, trying to get that servicing platform, right? So you're seeing a lot of mergers and acquisitions on servicings from the mortgage lenders, and it's a race to who can own the data and who can own the customer to try to get that refinance. So the question is, why? Why are we in this consolidation phase? Well, after this quick commercial break, we'll be right back with that breakdown. Today's episode is brought to you by Texana Bank Mortgage. They're coming to the table with a revolutionary product. It's called REMLO, Real Estate Mortgage Loan Officer. And what they are doing is they are taking real estate agents and they're taking loan officers, and for the first time in history, they're putting them together under one umbrella. They're actually taking two industries right now that sit on top of each other, and they're putting them together and backing it by a full-service bank licensed in all 50 states. So imagine this. You're not just an agent anymore. You're a full-service agent. You're the single trusted point of contact for your client in this entire process. You're seeing the loan and the home search front to end. It's going to change the dynamic of real estate and mortgage lending together. Now, if you're a real estate agent, I want you to do me a favor. I want you to go to askaboutremlo.com. That's askaboutremlo.com. Because what you're going to find there are significant details about this program, how to enroll, and how to gather more information. So if you're ready to adapt and thrive, go to askaboutremlo.com. That's askaboutremlo.com. Hey, so welcome back. Love that sponsor we got right there from Texana Bank and their REMLO program. Second to none, trademark pending. It is an amazing thing. If you want more information on that, like the commercial said, go to remloprogram.com or shoot us a quick DM at the show here. Would love to kind of point you in the right direction. Massive opportunity for the agents that are taking advantage of that dual capacity done right. Love that program. All right, so why? Why are we having these consolidations? Well, let's start back on the mortgage side, right? When a mortgage lender attempts to acquire a servicing platform, they're buying future opportunities, right? They're buying not necessarily leads, but they're buying future revenue. And then in hopes of maintaining that revenue, they're going to wait for a rate drop and refinance what we call, I don't like the word churn, but imagine a portfolio that you have a high percentage of refinancing them. You're going to collect fees on the refinance. You're going to put them back into your portfolio, into your servicing platform again, and you'll continue to generate revenue off of that. And buying larger ones gives you opportunities on your hedge to help offset any future rate hikes as well. So there's a lot going on that particular space, and the race to the massive lenders to get bigger is one like I've never seen before. And I think that presents huge opportunities in the market. I also think there's some scarcity going on because a lot of lenders right now are not keeping their paper that they book. They deliver it to another lender. They sell it in the secondary. And they do that because the pricing and the premiums are better than servicing or selling direct to the agencies at the current moment right now, the agencies being Fannie and Freddie. That will change. That will pivot. It always does. But in the current environment, it doesn't make sense for a small to mid-sized lender to try to run in that space. The massive ones have the advantage in that particular play. But back to real estate, why would they be consolidating, right? Well, I think for the longest time, you had these pillars in real estate. You had the Kellers, you have Caldwells, and I'm not talking about the independents, the people that have franchises. I'm talking about the big companies that are just strictly attached to that, right? You had the pillars. And then you had Keller, you had Caldwell, you had Remax, you had Century 21. Well, what's in Sotheby's? And then all of a sudden there's some big new players over the course of the last 10 years that came out of nowhere. Compass being probably the biggest one, right? And then you had, which was a venture capital startup. Then you had Real come out of nowhere, and they all are very funded. They don't have a huge legacy of situational contracts, et cetera, that they have to deal with. They have opportunity. And the one thing that we know about a downward trending market, and you could argue these numbers are down right now compared to what they were 4 years ago. It's not a down market. They're just down from where they were post-COVID. Everybody is. You gain market share in a downward trending market. That's exactly what they're doing. And so by consolidating and getting in there, it presents opportunities. But it also gives, I think, the franchise companies an upper hand, meaning that let's say you own a franchise, a Caldwell, Keller, you have the upper hand because just because someone came in like Stone Capital and purchased the majority shares of the organization, if you're a franchise, you don't have to necessarily stay there. You don't have to agree to the new terms of the contract. You control the destination, put a new sign on that door, and as long as your agents are good with it, you can go pivot to another place. So I think it gives those franchisors an upper hand in this particular situation, good or bad, right? The other thing is the reason this is getting done, though, is because getting more chances to eliminate the competition and bring people under one presents you a wider net to cast to the general public, which also gives you an opportunity to generate more revenue. Because if you become the last man standing or the first to market, you're going to win out in this. And so that's how consolidation works. And as we come out of that consolidation phase back to normal, right? This is what the market presents as an opportunity when you get back to normal. Because coming out of consolidation, I always say if you're one of the ones that didn't get consolidated, you may stand a greater chance in that next wave of normal to expansion to actually do something completely different or that was never thought of, or that you didn't think you could do because you actually survived the consolidation phase. I also believe this, in the consolidation phase, I think there's massive opportunity there to be had, especially if you're the consolidator, not the consolidated, because again, you're gaining market shares. And if the market share is down, let's say 20%, and you just took over 10% of the market, well, when it goes back up, your elevated 10 is much greater than it was at that lower percentage. So that's another reason you see a lot of the consolidation take place. But going back to the life cycle here, I think this is really important. Any industry that you're at, coming into normal is going to be a new normal. I had someone tell me, they were like, hey, you can't count COVID when you talk about this because where we are right now, we've never seen anything like it before. And I'm like, you're right. And it's because of what happened in COVID. Like, we're literally paying the piper now with some of the things that we're dealing with because of COVID in our industry. And then, obviously the buyer has and the seller has a different psyche now than they did in 2019. So that normality is going to change a little bit. But getting back to normal as far as consistent amount of transactions, consistent amount of inventory, consistent amount of opportunity, That is coming. And you're going to see a little bit with some rate relief, but it's not going to be anything significant. But normal is more clear and more in the future than I've seen than ever before over the last 3 years. Last 3 years has been pretty cloudy. Starting to remove that and see some lights there. So I'm very excited about that and want to share it with you guys. If you like what you're hearing, please share this podcast. If you would, give us a 5-star review on any platform that you're listening to, especially on Apple, especially on Spotify. That's where we get the most bang for our buck there. And if you're not a podcaster, check us out on YouTube at What's Your One More with the number one, our platform. If you would, subscribe and like. We'd love to hear back from you on there. Till then, hope you guys have a great one. We'll see you at the next episode of What's Your One More.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all into it, yeah.